Hey guys, today we're going to talk about Warren Buffett's passive investment strategy you should follow. Let's get right into it. Number 1, look for a safety margin. Buffett's investment philosophy is based on prioritizing a margin of safety. A margin of safety, in simple terms, refers to characteristics of an investment that help to protect investors from losing money. For example, if a stock is trading at $10 per share, but the company's assets are worth $12 per share, there is a $2 margin of safety. The intrinsic value of the asset should keep the stock price of the company from falling too far. Buffett's goal is to always pay less than the intrinsic value of a company. As he says, a too high purchase price for the stock of an excellent company can undo the effects of a subsequent decade of favorable business developments. Number 2, prioritize quality. Warren Buffett does not invest in garbage. He almost never buys struggling businesses, no matter how cheap they become. One of the best Buffett quotes new investors can absorb is, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price." Number 3, don't go along with the crowd. Another piece of Buffett advice that is critical for beginning investors, especially in the age of Reddit message boards: don't buy stocks just because everyone else is doing it. But don't try to be a contrarian by selling stocks that everyone else is buying. The best way to invest, according to Buffett, is to ignore the crowd entirely and focus on finding value on your own. He also says the most important quality for an investor is temperament, not intellect. You need a temperament that neither derives great pleasure from being with the crowd or against the crowd. Number 4, don't be afraid of market crashes or corrections. The obvious goal of stock investing is to buy low and sell high, but human nature can lead us to do just the opposite. When we see all of our friends making money, we feel compelled to try to make money as well. When stock markets crash, it's human nature to sell before prices fall any further. Buffett enjoys when stock prices fall because it creates opportunities to buy at a lower price, which explains why 2022 has been a particularly active year for him. Would you panic and flee if you were shopping at your favorite store and suddenly discovered that the entire store's prices were 20% lower? Obviously not. Buffett embraces discounts on his favorite stocks and says, opportunities come in frequently. When it rains gold, put out the bucket, not the thimble. Number 5, consider your investments with a long-term perspective. One of the most important Warren Buffett investing quotes is, if you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. He doesn't pick stocks because he believes their prices will rise this week, this month, or even this year. Buffett purchases stocks because he intends to own the companies for the long term. He still sells stocks on a regular basis for a variety of reasons, but he approaches the majority of his investments with the intention of owning them in perpetuity. And if you can't get into a forever mindset with your stocks, Buffett believes an S&P 500 index fund is one of the best investments most people can make. Number 6, if the situation changes, don't be afraid to sell. The most important thing to do if you find yourself in a hole is to stop digging. Warren Buffett famously said that when asked about an investment he decided to sell at a loss. While he certainly wishes to own every stock he purchases in perpetuity, the reality is that outlooks change. It may surprise you to learn that Buffett invested heavily in the mortgage company Freddie Mac a few decades ago. However, a few years before the 2007 and 2009 financial crisis, he noticed the lender's management was taking unnecessary risk with the company's capital and decided to sell. When the financial crisis hit, it was clear that Buffett had made a wise decision. Number 7, learn the fundamentals of value investing. Warren Buffett is widely regarded as the world's best value investor. Value investing emphasizes paying low prices for investments in comparison to their intrinsic values. The goal of a value investor is to buy $100 worth of a company stock for less than $100, preferably much less. Value investors seek out and invest in companies that have intrinsic values that are significantly higher than the enterprise values implied by the prices at which their stocks trade. Value investors, such as Buffett, believe that the market will eventually recognize an undervalued company's full value, resulting in an increase in the company's stock price and a profit for the value investor. Number 8, learn about compounding. Warren Buffett is perhaps the best example of the power of compounding over time. Buffett benefits from compound interest, dividend reinvestment, and the ability to constantly reinvest the operating cash flow generated by Berkshire's businesses. How potent is this? Since Buffett took over in 1964, Berkshire has averaged a 20.1% annualized return compared to 10.5% for the S&P 500. Number 9, research and reflect. Buffett sees knowledge as something that accumulates over time, and he attributes much of his success to amassing as much investment knowledge as possible. That's all for today, and we'll be sure to catch you all in the next one.